There's a moment that comes to every trader. Usually late at night, you're sitting alone, staring at your screen, or maybe just staring at nothing, and you feel this weight. Not the weight of a single loss. Not even the weight of a bad week. It's something heavier. It's the accumulation of all those times you knew what to do and didn't do it. All those moments you had a plan and abandoned it. All those days you promised yourself you'd be disciplined, and by noon you'd already broken that promise. And in that moment, you ask yourself a question that cuts deeper than any losing trade ever could. You ask, why can't I just do what I know I'm supposed to do? That question is what we're here to explore tonight. Not with quick answers or simple fixes, because you've probably heard those before and they haven't worked. We're going to go deeper. We're going to talk about consistency. Real consistency. The kind that actually changes your trading and your life. The kind that's built not on willpower or motivation, but on something far more reliable. And we're going to talk about small wins. Not the big dramatic victories that everyone celebrates, but the tiny, almost invisible successes that most traders dismiss as meaningless. Because here's what I've learned after working with hundreds of traders at every level. The ones who make it, the ones who actually build sustainable careers, they're not the ones with the most talent or the best strategies. They're the ones who understand something most people never figure out. They understand that consistency isn't about being perfect. It's about being present. And small wins aren't preparation for the real game. They are the real game. Let me ask you something, and I want you to really think about this. When you imagine yourself as a successful trader, what does that look like? Be honest. For most people, the image is dramatic. Big positions, major wins, that feeling of triumph when everything goes right and the money pours in. The validation, the proof that you were right all along. And there's nothing wrong with wanting that. But here's the problem. That image, that fantasy of what success looks like, it's actually working against you because it makes everything else feel like it doesn't count. It makes the small stuff feel trivial. You follow your trading plan for 3 days in a row, risking only what you should risk, taking only the setups that match your criteria, and what happens? Nothing dramatic. You're up a little. Maybe flat, maybe down slightly, but within your acceptable loss range. And some part of you feels disappointed, like you did all that work for nothing. Like those 3 days of discipline don't matter because they didn't produce the outcome you really wanted. So, on day 4, you get a little loose with your rules. On day 5, you take a trade you shouldn't take. And by day 6, you're back in the same pattern you've been trying to escape for months or maybe years. This is the trap. And it's not about discipline. Not really. It's about how you've defined what counts. It's about which scoreboard you're watching. Most traders are watching the wrong scoreboard. They're watching the money. And I understand why. Money is tangible. It's measurable. It's the whole point of trading, right? But here's what happens when money is your only measure of progress. Every day becomes binary. You either made money or you didn't. You either won or you lost. And on the days you didn't win, even if you traded perfectly, even if you did everything right, it feels like failure. This creates an impossible psychological situation because the market doesn't care about your perfect execution. The market does what it does. You can take a textbook trade, manage it beautifully, and still lose money. And if that registers as failure in your mind, you're building an association between doing the right thing and feeling bad. Over time, this association will destroy your ability to trade well. Your brain will literally start avoiding the behaviors that lead to good trading because those behaviors have become linked to disappointment. Let me tell you what consistency actually is. It's not about doing things perfectly. It's not about never making mistakes. Consistency is about showing up to your process regardless of outcome. It's about honoring your commitment to yourself when no one is watching and nothing dramatic is happening. It's about building trust with yourself through repeated small actions that align with who you say you want to be. Think about that phrase. Trust with yourself. Most traders have completely eroded that trust. They've made so many promises they didn't keep. They've set so many rules they've broken. They've said this time will be different so many times that the words have lost all meaning. And now they don't believe themselves anymore. They can write a perfect trading plan, and some part of them knows they won't follow it. They can set clear rules, and some part of them is already planning the excuse for why those rules won't apply in the moment. This is what inconsistency really costs you, not just money. So, how do you rebuild that trust? Not through some massive overhaul or dramatic commitment. You rebuild it the same way you build trust with another person. Through small, consistent actions over time. Through showing up when you said you would. Through doing what you said you'd do, especially when it's not exciting or rewarding in the moment. This is where small wins come in. And I need you to really understand what a small win is, because most traders misunderstand this completely. A small win is not a small profit. It's not about the outcome at all. A small win is any moment where you honor your commitment to your process. You feel the urge to overtrade, and you don't. That's a win. You feel angry about a loss, and you close your platform instead of revenge trading. That's a win. You plan to review your trades at the end of the day, and even though you're tired and it seems pointless, you do it anyway. That's a win. These moments feel like nothing when they happen. They don't give you a rush. They don't feel significant. They're just quiet little choices that seem to vanish the moment you make them. But they don't vanish. They accumulate. Here's what most people don't realize about human psychology. Your brain is always watching you. It's taking notes on whether you're reliable or not. Every time you do what you said you'd do, even in some tiny way, you're sending yourself a signal. You're saying, I can count on me. And every time you don't, you're sending the opposite signal. Over time, these signals become your identity. They become what you believe about yourself. And what you believe about yourself determines what you're capable of. The traders who struggled the most, they're often incredibly hard on themselves about big failures, but they completely ignore small betrayals. They'll beat themselves up for a major loss, but they won't even notice the 100 little moments where they didn't do what they planned. They don't see that those moments matter. They don't understand that inconsistency isn't usually one big dramatic break. It's 1,000 tiny fractures that happen when you're not paying attention. Let me tell you about the psychological pattern I see more than any other. A trader has a bad period. Maybe they lose money. Maybe they just feel stuck. So they decide to make a change. They're going to be disciplined now. They're going to follow their plan perfectly. They're going to be the trader they know they can be. And for a few days, maybe even a few weeks, they do it. They're strict with themselves. They follow every rule. And it feels good. It feels like progress. But then something happens. Maybe they have a great trade that makes them feel invincible. Maybe they have a frustrating loss that makes them feel defeated. Maybe nothing happens at all and they just get bored. And in that moment, they make an exception. Just this once, this situation is different. The rules don't quite apply here. And they take the trade they shouldn't take. Or they skip the review they should do, or they risk more than they planned. And here's the crucial part. That exception feels fine in the moment. It might even work out. But what just happened in your psychology is devastating. You just taught yourself that the rules are optional. You just showed yourself that your commitment isn't real. You just made it easier to break the rule again tomorrow. This is how inconsistency becomes a pattern, not through conscious choice, but through tiny moments where you decide that this particular situation is different. And once you open that door, once you establish that there are exceptions, then every situation starts to feel like an exception. Your trading plan becomes a set of guidelines rather than rules. Your rules become suggestions, and your suggestions become something you consider but rarely follow. The antidote to this isn't stricter rules. It's not more discipline in the way most people think about discipline. The antidote is understanding that every single decision you make is either building or eroding your consistency. Every single one. There are no neutral moments. You're either keeping your word to yourself or you're not. And the small moments matter just as much as the big ones, maybe more. Because it's easy to be disciplined when it feels important. It's easy to follow your rules when you're scared or when the stakes are high. The real test of consistency is what you do when it doesn't seem to matter. When no one would know if you cut corners. When you're tired or bored or nothing exciting is happening. Let me shift this slightly, because I want to talk about what happens when you actually start accumulating small wins. Not when you're trying to. Not when you're white-knuckling your way through discipline. But when it becomes real. When you genuinely start showing up for yourself consistently. The first thing you notice is that trading becomes less emotional. Not because you care less, but because you're not constantly negotiating with yourself. You're not endlessly debating whether to follow your plan. You're not exhausting yourself with internal arguments about whether this trade or this situation is different. You just have a process, and you follow it. And that creates psychological space. Clarity. When you're not using all your mental energy to fight yourself, you have energy available to actually observe the market, to think clearly, to make good decisions. The second thing that happens is more subtle, but even more important. You start to like yourself more. I know that might sound strange, but it's true. When you're consistently keeping your word to yourself, when you're honoring your commitments even in small ways, you develop a different relationship with yourself. You're not constantly disappointed in yourself. You're not carrying around that low-grade shame that comes from knowing you're not doing what you said you'd do. Instead, there is this quiet confidence that has nothing to do with arrogance or ego. It's just the simple knowledge that you can count on yourself. And that changes everything. It changes how you make decisions. It changes how you handle losses. It changes how you think about your future. Because you start to believe that you're actually capable of doing what you set out to do. The third thing is that your results start to stabilize. Not because you're suddenly making better predictions or finding better trades, but because you're removing the biggest source of volatility in your trading, which is you. When you're inconsistent, your results are chaotic. You have some good trades mixed with impulsive trades, disciplined periods mixed with emotional spirals. Your equity curve looks like a heart monitor. But when you become consistent, when you're executing the same process over and over, your results start to reflect the actual quality of your approach rather than the random chaos of your emotional state. And this is where you can actually learn something. This is where you can see what's working and what isn't, because the data isn't contaminated by your inconsistency. But here's what I need you to understand. This doesn't happen because you tried really hard for a week. This doesn't happen because you made a commitment and stuck to it during one good trading period. This happens because you accumulated small wins over a long enough timeline that they became your new normal. You piled up so many moments of honoring your process that it stopped being an effort and started being who you are. And this is why small wins are so powerful. Because they're sustainable. You can't white-knuckle your way through months of perfect discipline. You'll break. Everyone breaks. But you can commit to one trade at a time, one decision at a time, one small win at a time. You can do the right thing right now, in this moment, without worrying about whether you'll do it tomorrow, or next week, or next month. And if you do that enough times, tomorrow and next week, and next month, start to take care of themselves. There's something else I want you to consider. Most traders think the goal is to reach a point where trading becomes easy, where discipline is automatic, where they never feel tempted to break their rules. But that's not how it works. Consistency doesn't mean you stop feeling the pull toward impulsive decisions. It doesn't mean you stop getting frustrated or impatient or scared. It means you feel those things and you don't let them determine your actions. You feel the urge to overtrade, and you notice it, and you choose your process anyway. You feel angry about a loss, and you acknowledge it, and you stick to your plan anyway. This is what maturity looks like in trading. Not the absence of difficult emotions, but the ability to act in alignment with your values regardless of what you're feeling. And here's the beautiful thing about this. When you approach consistency this way, when you see it as a practice rather than a destination, failure becomes less devastating because you're not trying to be perfect. You're not trying to never break your rules. You're just trying to honor your process more often than you don't. And when you do break a rule or make an impulsive decision, you don't spiral into self-judgment. You just notice it. You learn from it, if there's something to learn, and then you refocus on the next decision, the next opportunity for a small win. This is the mindset shift that changes everything. Moving from I need to be perfect to I need to be present. Moving from I need to prove something to I need to show up for my process. Moving from big wins matter and small wins don't to every moment I honor my commitment is a win that matters. Let me bring this back to something concrete because I don't want this to feel abstract. Tomorrow, when you sit down to trade, you're going to have dozens of small decisions to make, maybe hundreds. Most of them will feel trivial. You'll decide whether to wait for your actual setup or take something close. You'll decide whether to risk your planned amount or adjust it because this one feels extra good. You'll decide whether to check your phone during the trading session or stay focused. You'll decide whether to review your trades at the end of the day or skip it because you're tired. Each of these decisions, individually, seems meaningless, but collectively, they are your trading career. They are the compound accumulation of whether you're building consistency or eroding it. And here's what I want you to try, not as some grand commitment, but just as an experiment. For the next week, stop tracking your financial results as your primary measure of success. I'm not saying don't look at them. I'm saying don't let them be the scoreboard. Instead, track your small wins. At the end of each trading day, write down every moment where you honored your process, where you kept your word to yourself, where you did the right thing even though it wasn't exciting or immediately rewarding. Track those. Count those. Notice how many there are. And at the end of the week, look at what you've accumulated. Look at the evidence that you can be consistent, that you can count on yourself, that you're capable of showing up for your process regardless of outcome. Because here's what happens when you do this. You start to see that you have more control than you thought. Not control over the market, not control over outcomes, but control over yourself. Control over your choices. Control over whether you're building the kind of trader and the kind of person you actually want to be. And that control, that agency, it's the foundation of everything good that happens in trading. It's what allows you to stick with a process long enough for it to work. It's what allows you to learn from your experiences rather than just repeating the same patterns. It's what allows you to build something real and sustainable instead of just endlessly cycling through hope and disappointment. The power of consistency is that it removes the drama. And I know that sounds unappealing at first because we're drawn to drama. We like the story of the big comeback, the massive win that changes everything, the moment of triumph. But drama in trading is usually just another word for chaos. And chaos doesn't build careers. Consistency does small wins do, showing up every day and doing the work even when it's boring, even when nothing exciting is happening, even when you're not getting the feedback you want. That's what builds something real. And the beautiful irony is that when you stop needing the drama, when you find satisfaction in the small wins, when you can feel good about honoring your process regardless of outcome, that's when trading actually starts to work. Not because the market changed, not because you found some better strategy, but because you changed. Because you became someone who can be trusted to do what needs to be done. Someone who doesn't need constant external validation. Someone who understands that success is built one small decision at a time. So let me leave you with this. Tonight, before you sleep, think about one small win you can commit to tomorrow. Not something huge. Not some dramatic overhaul of your entire trading approach. Just one specific thing. One behavior you'll honor. One decision you'll make in alignment with your process. And then tomorrow, do it. Not perfectly. Not with the expectation that it will change everything. Just do it. Honor that one small commitment. And then the next day, do it again. and the day after that, and notice what happens. Notice how those small wins start to accumulate. Notice how they start to change the way you feel about yourself and your trading. Notice how they create momentum. Not the flashy momentum that comes from big wins, but the quiet, sustainable momentum that comes from showing up consistently for the person you're trying to become. Because that's what this is really about. Not trading, not money. Not even consistency for its own sake. It's about becoming someone you're proud to be. Someone who keeps their word. Someone who honors their commitments. Someone who understands that the small things are actually the big things, and that the power of consistency isn't that it guarantees any particular outcome. It's that it guarantees you'll become the kind of person who's capable of handling whatever outcome comes. The kind of person who can lose without breaking, who can win without losing themselves, who can show up day after day, regardless of circumstances, and do what needs to be done. That's the trader you're trying to build, and you build them one small win at a time. If this resonated with you, leave a like and subscribe so we can keep working on this together. Take care of yourself, and I'll see you in the next one.